Welcome to the ARMR report. ARMR stands for Algorithmic Risk Management Research. I'm your host, Brett Rosenthal. That sounds like a mouthful, but what it really means, not the Brett Rosenthal, but the ARMR report, sounds like a mouthful. What it means is we use traditional fundamental analysis on this trading desk. We meet with management teams at companies. We cover conference calls. We build our whiteboard to invest in the stock market in 2019 like we always do. But we use millennial tools to help us execute better. And that's what I'm trying to share with you every day on the show. So this is a live trading desk surrounded by computers. I'm actually trading as we speak. I have trades on right now. I have investments. I'm managing investment portfolios, both my own personal capital and that of investors. So the information I'm sharing with you is real information that's actually being used to manage an equity portfolio successfully. And I'm doing this for two reasons. One, you listening to me really helps me out. When I come on and I talk to you, either on Blog Talk you're listening or you're watching on YouTube, it really forces me to execute correctly. The hardest part of investing is literally the execution part. We can all come up with the greatest investment ideas in the world. We can do our research, but when it comes to clicking that button and investing or trading, that's where the rubber meets the proverbial road. And so doing this every day with you, I really appreciate you listening because it helps order my own thinking and it makes sure I execute correctly because I'm on record. First order of business. I hope you guys join me for the 5-minute morning meeting this morning. I'm going to be doing that every morning on the YouTube channel. So I'm just trying to give you some quick thoughts on our trading desk of how we're preparing ourselves, whether it be a day trade or whether it be a multi-day investment strategy. What's the most important thing of the morning and how are we attacking it? So this morning it was the Fed meeting, and I'm going to get to that. I shouldn't say meeting. It's more of Chairman Powell made comments, and we have the employment report. And so those are the big pieces of news, and I want to share with you how we're either trading that on the day or how does it affect our investing approach. Step one, every day, step one is to look at the top 5 indexes that we have proprietary algorithms written for. And those indexes drive all of our decision-making when it comes to risk on or risk off in a portfolio. We have been risk off since December 4th. You guys can look at our website, rosenthalcapital.com, and you'll see real-time risk on, risk off monitor. So we've been in cash or the best way for you to use this as an investor on your own is to understand that if these 5 indexes are telling us risk off, then whatever you consider to be your most conservative stance is where you should be. If you're a long-term buy and holder and you never sell anything, at the very least, stop buying things, okay? If you're more of an active manager, obviously you apply it differently. So you determine what you want to do with that information that I'm providing, but just know that when all 5 indexes are suggesting we should be risk off, it's important that we're in our most conservative position. If you scroll down the screen on our homepage at rosenthalcapital.com, you'll see the 3 model portfolios that we run through Interactive Brokers. And I'm just sharing with you there what they look like. Broad strokes now. I don't discuss individual stocks, but I let you know what groups we're focused on and how aggressive we are invested. And you'll see across the board, whether it's conservative, balanced, or aggressive, we're significantly in cash, holding U.S. Treasury bills, and focused on the precious metals space. And we've been doing this for the last couple of weeks. In our aggressive portfolio, we'll day trade and we'll set up short positions. In our balanced portfolio, we won't do those things. And we won't do those things in our conservative portfolio. All right, so without further ado, does the Fed comments today, does the economic number of jobs reports today change the algorithms? The answer is no. As of right now, for those 5 algorithms, nothing has changed. We are in a deeply oversold market. We all understand that. There could be rallies at any time to work off that oversold condition. Our algorithms are designed to try to smooth out that experience. We're not looking to get in and get out and get in and get out, add risk, subtract risk on a day-to-day basis because of a huge up day. That doesn't normally change our stance. And specifically the reason why, and I've gone over this in previous podcasts, so bear with me if you've heard this before, but in bear markets, you will often have one or two day rallies of enormous proportions. I mean, huge percentage moves over 1 or 2 days. And then the market reverts back to the trend, which is lower. And so if our algorithms don't incorporate that knowledge, we'll just be flip-flopping back and forth, back and forth. We have to be willing to acknowledge that we're not trying to buy the bottom in the market. Okay? We will miss the bottom. I'm happy with that. I don't care about trying to catch the bottom, the proverbial catching the falling knife. It doesn't work. That's an ego-driven thought. That's a fear, greed-driven thought. I got to buy the bottom of the market. I don't want to miss it. I don't care if I miss the bottom. I'm looking for the right risk-on opportunity that will lead to multi-day, multi-week, multi-month positions that increase net worth in a meaningful way. And I'm looking to avoid the whipsawing and the flip-flopping. So 1 or 2 day rallies in the downtrend don't mean a thing and don't change our stance at all. You get to day 3, then it starts to get more interesting if the setup's correct. So far, the market hasn't had 3 up days in a row since this downtrend began. I don't think, I'll have to go back and look, but certainly in December, I don't think it has. So there really is nothing for us to do in that regard. All right, let me just look at my notes. What did I want to cover with you? Oh, that's the other thing. There's a lot of cross currents going on. At the very end of a year and the last 2 weeks of a year and the first 2 weeks of the next year, you get a lot of craziness going on. We got oversold remarkably in the last couple of weeks of December. A lot of it's tax loss selling, a lot of strange stuff like that. And then we had this big run up in the last couple of days of the year, and that had to do with a lot of portfolio rebalancing. It spills over into the beginning of the new year, and this all adds to extreme volatility. What you want to try to do is avoid the hysteria of these extreme days. Just be patient and wait for things to settle out. And we'll get a better understanding of where the market is by the end of the middle to the end of January than we will in the first week. There's all kinds of craziness that happens in the first week. So oversold conditions, start of the new year, rebalancing, all these things can lead to a rally in the market. But the question I ask myself every day, whether it be a day trade or a multi-day investment opportunity, I ask myself, am I on the right side of probability and statistics? Well, the algorithms help us do that. So when they tell us risk on across the board, we're on the right side of probability. But then the very next question, and they go hand in hand, is do we think the statistically speaking, is the reward from here great enough for the risk we have to take? That's the one that's really keeping us on the sideline right now. Yes, the market could go higher in here. It's possible. But is the reward worth the risk we're taking if we put capital to work? And in the moment, the market is dropping 2 and 3% in like an hour in this market. And so that's a lot of risk. There's a lot of overhead supply. We're in a nasty downtrend. We need a better basing structure for us to really believe we have a multi-day, multi-week, multi-month opportunity here. And instead, right now, we're caught in a washing machine of craziness. And so we'd rather focus on day trades where the volatility is huge and we put out, on days like this, we're looking to get short. On days where the market's down huge, we're looking to get long for the day. And we're going to focus on groups that we think are setting up right. The only group that's setting up right now is the precious metal space. I'm going to get to that in a minute because today's action is very interesting and adds to our bullish stance. The last thing I'll say about today's economic numbers and Fed comments, two things. First of all, the close is more important than the open today. Now, this market looks like it's going to run all day, and it may. I mean, there's nothing wrong with a big up day. It happens all the time in the market. In a bear market, big up days happen all the time. So it'll kind of be more important what happens next week. But really, the close is going to be more important than the first couple hours of trading to me. I really want to see how this market handles these big gains into the weekend. And the other thing is, if you look at our website, you go to our algorithmic research page, you see our blogs. One of our blogs is our blogs about that I call Rules of the Road from 30 years of doing this. I've been on the high seas 30 years investing for myself and for individuals. And I'm building a list of all my knowledge. I'm just putting it out for you and hoping to offer you some guidance and some hard fought knowledge. And one of the rules, rule number 3, on this list, you can go to the website, rosenthalcapital.com, and you can pull up the rules. The reason I was on the morning call telling you I don't really care what the jobs report is, and I don't really necessarily care what the Fed says. I only care what the reaction to the news is. And I care about that reaction by the end of the day. What's the reaction to the news, and how does the day end? You can have a rally that lasts 2 or 3 hours on any given day. It's a question of where the market closes, and that will tell me how important that information was. I spend less time trying to figure out what it means and argue the pros and cons of the economy and the numbers and all this mumbo jumbo. And I spend more time trying to figure out, is it going to change our algorithms? Does it change our stance of risk on and risk off? I really don't care to parse the details. And I'll tell you something else. Even if the market's up big at the end of the day today, which it looks like it's going to be, my guess is it will. I think this is just for fun now. I don't know. What I care about is the reaction to the news. But I'm just going to share an opinion with you, and we'll see what happens with this opinion. I see a lot of guys happy that Chairman Powell came out and revised his stance, and he's going to do this and going to do that, so the market's up. If the market's down by the end of today, if it gives up a lot of the gains, if it's down next week, so this is just like a one-day event today, what that will mean to me is that the market is now more focused on the Fed's actions than its words. The Fed keeps flip-flopping. At one point he says, we're on autopilot. Market plummets. So now he comes out today and says, nothing's on autopilot. If we have to make changes, we'll make changes. So the market's up huge. This is just a lot of whipsawing. If the market resolves itself to the downside, what that's telling you is that the Fed now has lost credibility. And so its actions will be more important than words. I think it's absurd that I see guys on CNBC all morning talking about how the Fed's not going to raise rates until December now. Where did they come up with that? Did you listen to what the Fed had to say? Did you watch the news? I watched it. I watched the whole thing. All he said was if things, get bad enough, we'd change courses if we had to. But things aren't bad. We just had a huge economic number, right? Massive jobs growth. So the Fed's still on the path of raising rates a couple times next year. How do you make the leap that the Fed's not going to raise rates till December now? Because Powell said, yeah, if things get awful enough, we'll change. Well, things aren't awful, so they're not changing. Just something to think about. Let's look at the reaction to the news, not just today, but over the next week. Where are we a week from now? A one-day jump in the market on Fed speak after the market's been down huge doesn't mean anything. Where are we a week from now? All right, so let's move on. And I'm going to try to make these, I've been talking for about a half an hour, every day last year. There's a lot to talk about. Right now, we're kind of in a holding pattern. There's not a lot to talk about. I want to try to make these episodes a little bit shorter for you so you can, bite them off a little bit at a time and do our morning call as well. So I'm just going to wrap up real quick on a discussion. Well, I think I did mention to you guys I was going to talk about my short trade in small caps. So on a day trading level, just for you day traders out there, what do we do on a day like today? Market's up huge. I look for tops to form over a half an hour to hour period on particular indexes. And if certain areas get violated, I put shorts out. I'm not really getting paid on this short, but I did tell you that I put the short out and we booked a profit as the market moved back down to the VWAP, which is typical. The small cap index is my place to short on days like today because it's the first index that's going to go down if things go sour. Small caps are my favorite place to short because there's the least amount of support in the market for small caps. They're up huge today. The whole market looks like it's breaking out. I've already booked a profit down at the VWAP. Still got a trade on. It's coming back up into my overhead. If it takes out levels anywhere close to here, I'll probably be covering that short out and looking for better opportunities later in the day. But I'm going to give it some room in here. Market hit a top right after the Fed made its comments at around 10:30 on volume spikes. Now it's put in that top since 10:30, 11:30. Now we're almost getting up to 12:30. I'd like to see where we where the trade closes out around 12:30, and we'll see if I cover the rest of that short. So we're right back up into the area that I shorted, and I booked a profit cheaper down at the VWAP. So that's how I day trade on days like today. I'm looking for that big reversal trade. If I don't get it, I get out. Trades I put on a day trade, I'm looking for mean reversion. So if we're up huge in the morning, I'm looking for a move back down. If we're down huge in the morning, I look for a move back up. Whatever triggers you use, I have my own triggers to do it. And I usually keep my stops pretty tight. Either you get paid on these trades or you don't. All right, let's switch over real quick to the group that we're focusing on. This is very important today. We're focused on the precious metal space. I've heard a lot of people on CNBC in the last 48 hours say that gold has peaked, silver has peaked, these stocks have peaked. The Fed comments are terrible for gold. The market's up big. Usually gold goes down. And what I find that's interesting right now, and again, the day's not over, so we'll have to see where the market closes. But gold stocks, GDX is down about 0.75% after being down over 2% at the open. The smaller cap gold stocks are down even less. Silver's up on the day. Gold is well off of its lows. So that's what we're looking for. We have a risk on entry point a couple of weeks ago in the metals. And so what we look for days like today when the market's getting whacked, or I should say the metals should be getting whacked, the market's up huge. Normally these stocks sell off big. If they don't, that tends to be confirmation that it's a right group for us to continue to focus on. And so, again, I have to see where we close the day. I mean, they could kill these stocks into the close for all I know, and it could change my opinion. But as for right now, I've got some gold stocks in the portfolio that are going up in the midst of a huge up market. That's, I talked about bear paws. That's a bull hoof mark. I'm telling you, in the last 7 years, when the market's up this big, they are killing GDX. It's usually down 3-4% on the day. It's down 0.75%. Royal Gold's up right now. One of the biggest names in GDX, up right now. That's a change. All right, keep your eye out for that. I will talk to you again tomorrow. I'll see you tomorrow morning around 9 o'clock for just a 5-minute preview of how we're going to be trading and investing. And we'll be back here at 12 noon to go over details. If you have any questions, feel free to email me. It's you can go to our website, info@rosenthalcapital.com. I'd be more than happy to discuss it on these calls. And I wish you all a good day of trading. Be safe out there. Have some fun. And be patient. Oh, dear.
Versus the defensives, because over the last couple of months, we've actually seen utilities and staples and rates be the leader. So today, it's nice to see the reaction, the appropriate reaction, in my view. So it's technology. Look at industrial. Some of these.
Are you a buyer of stocks today? Did Powell just give you the license to buy stocks?
Well, I was buying yesterday. I mean, I've been buying all along, and I've been wrong, right? I mean, the market's gone down, but the way I view it is I'm trying to find quality companies with very strong balance sheets and exceptional management teams that actually have delivered consistently in the past year and maybe have overshot to the downside. So something like